Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Thursday, January 27th. So let's go over the market recap. First things first, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. You could read the whole risk disclaimer here. Theme of the day, another market fade. Nothing new. It's kind of almost the same story every day at this point. S&P finishes down about 0.5% for the day. Qs finished down 1%. But if you look at where these things started for the day, they get a big red for the day. They both from open to close, just ugly price action, even more so with the small caps. IWM down 3% from the open, right? Because they did come into the day in the overnight session. They were kind of bid up a little bit, down 2.3% for the day. Microcaps even worse. IWC down 2.5%. Bonds, I could actually put that in green, right? You didn't hear me talk about bonds too much today. They caught a relief bounce. I don't know if it's so much flight to quality. I'm not really sure what's going on there. Maybe I think a little bit of weakness causing the bid in bonds. Keep in mind too, and gold, let me finish going through the macro stuff. Interesting, and I put a couple asterisks over here. The VIX was down on the day. I didn't really kind of, the way that this VIX has been moving all over the place, it's kind of tough to say, to make any type of conclusion intraday. But we closed at 30.50, which is a little bit of a move down. So if you're looking for positives out of this sea of red that you see in the sector charts in terms of the price action that happened over the day, perhaps that's one of them. Another one would be, Apple. I see Visa is also up. Team is also up after hours. So there's a couple bright spots, but there's clearly a lot of negatives too. So we'll go through some of those. I want to talk a little bit about the indices. There's clearly a lot of things to go over in this market, but let's start with the S&P, right? So S&P is holding up, better than the small caps. You could see I've got a couple trend lines drawn in here. They're not perfect, but I made it a point earlier as now that we've seen this coming into back into the 200-day moving average, right? This is Monday's price action that I think a lot of people, including myself, thought we would get some follow through from Monday's price action. We didn't. Wednesday obviously was all over the place with the Fed meeting. We actually intraday were over the 200-day moving average, and today was basically a doji. It looks like from the overnight price action. Remember again, like how wild these days are. Last night, I think futures were down like 1% last night. What made them go up this morning? I don't know, and it's really puzzling some of the price action that we're seeing. Keep in mind, right? We had some economics today. This is what I focus on with economics. I never focus on this, the GDP. Right? GDP is a lagging indicator. And if you don't believe me, sometimes I get questions about this. It is a lagging indicator. You could look, right? And like if you took like macroeconomics 101 somewhere in college or something like that, there's a section, and this is also like in the CFA exam, leading indicators, lagging indicators, and coincident indicators. GDP is a lagging indicator. So that's not what made the market go up, in my opinion, pre-market. It was this, right? The durable goods, which was worse than expected. Again, this is just a guess, and this is my take. But I think right now the bad news is good news, and I think that's why the market went up a little bit pre-market, right? Not because of the GDP numbers. I saw this being sent around a couple of places, and I don't agree with that. Core PCE also came in online with expectations, right? That's another gauge of I think inflation, we'll get that number tomorrow too. This is a number that the Fed looks at tomorrow. This is the Pce Deflator. So I know everybody likes to talk about the CPI. That's what grabs the headlines. But they also look at things like the Pce Deflator. They also look at things like wage increases for inflation, right? Which is what kind of the major issue is right now. So keep that in mind for tomorrow. We'll get that data. and we'll see how that goes from there. But really, whippy price action, very whippy price action. Just to kind of zoom in on, just because I always see some observations when I draw on and look at the shorter time frames, but this is the bottom of value for the week. We've just been in this range, back and forth, back and forth. Here was the high. We made a little bit of a lower high today versus where we were after the Fed announcement. And we're kind of coming to a point here. Now, my opinion is on this is that the longer that we keep pressing into the 200-day moving average and not taking it back, for me, the probability in my mind increases that this is becoming more of either a pennant, like a bear pennant, or a bear flag, right? And we won't know until this is broken, right? Everybody tries to anticipate what's going to happen here. Certainly you can kind of wait for that, right? Wait for the confirmation. Then for certainty what it's going to be. I keep going back to this. Someone actually asked me about this in the trading room earlier when we did our midday Q&A. Someone said, hey, was this a bear flag or a bear pennant? I wouldn't get too wrapped up with the pattern, but this was a consolidation. It kind of was a rising wedge of some sorts. And we only went so far back here, and we tested trying to turn the corner, couldn't do it. There was resistance up here, and then we broke to the downside. I'm not saying that that's going to happen. I'm just saying that you have to be open to all outcomes. Now, if you look at things like IWM, which I think leads a little bit, right? If you look at the price action in IWM today, notice that this is already, if you look at the 1 hour chart, we actually breached this, none of these bars actually closed. They explored this level. So this is actually the lowest closing level for IWM. So again, notice that this thing was in value a little bit for the week, touched inside, got inside value and was rejected. But yeah, I would keep an eye on these small caps. If they're going to take out the lows like this, I think it's going to be tough sledding for the large, to make a conclusion looking at small caps. What are the large caps going to do? It's probably not going to be a great thing if the small caps continue to break down. So that's what I'm watching. I thought, I said today, I said one of the stocks, I haven't really been putting out really detailed watch lists right now, other than just a few stocks to kind of watch. And, Tesla, which I didn't think that the quarter was that, that they said anything really that negative, other than things that we already know about, like the supply chain management and so forth. We know that they have demand for their cars, but they're having problems with, as is everyone, with the supply chain management. This did take out the lows for Monday. So, it's a little bit off the lows here in the after hours market, but I don't know, that doesn't give me a warm and fuzzy feeling. The fact that Tesla took out Monday's lows and has been such a champion of growth. Now, this has a test coming at the 200-day moving average, but as I've said before, and Katie Stockton was the technical analyst that I think I said somewhere about a week ago that she made this great quote. And I should really say something to her on Twitter, because I've been using this, because I just think it's a great example of how to explain something. What you want to see when Tesla gets down here to the 200-day moving average, and it's not that far away, is you want to see a change in momentum, right? You want to see something change, right? You don't want to just say, oh, I'm going to buy just because it gets to that line, in my opinion. It's that you want to see it stop going down, because we've seen a number of situations that things have gotten to particular traditional areas of support lines and they haven't held, right? And so that hasn't worked if you're just buying at lines. Going back to the S&P, 200-day moving average, something that you're usually supposed to kind of stop and consolidate at, that didn't happen, right? So you're, again, a change of momentum, when, support levels are touched, you should see a bounce and you should see some follow through, right? Is typically, or a little bit of consolidation and then follow through to the upside, right? That's the change of momentum. I got the question a few times about that. Like, oh, is there an indicator that measures that? No, it's watching price. You got to keep an eye on price. Price is this, always go to the simplest thing, not the hardest thing, right? So just watching price is going to give you a number of answers to your questions, right? And that's basically how I trade, right? I have a level to trade against. I stay in a trade as long as the price is above the level. And if it breaches that level, if it breaks that level, then I'm out, right? That answers your questions. You don't need some other, under the hood indicator, right? For that, right? So that, again, just giving you my opinion. But Ben, I wanted to talk about a couple other things too. So where's Apple, by the way? We might as well talk about that. So yes, they executed. They made a good point on CNBC, is that they're kind of, of all the supply chain issues, which again, everybody seems to be experiencing, they mentioned that they're kind of like number one, or probably very close to it, right, in the pecking order, in terms of like, if they've got a supply chain issue, right, they're gonna call up a supplier, and like, where do you think that supplier is going to put Apple when they call? They're probably going to put them pretty close to the first in line, right? So they're probably experiencing a little bit less issues, considering how high priority they must be for customers. So yeah, we'll see how this materializes. Remember Microsoft and what they did this week, right? And you can kind of look at some of these names that have, good results and so forth. Microsoft hasn't really gone anywhere. So what this, the translation here that I'm getting at is, I'm not really ready to do much, except kind of just continue to watch and be patient and wait until this price action is better. Right, we got to have better price action than this. For a name that beats, there's little to no follow through. Another one was Servicenow today, which did very well. For a software name that reported earnings, but it really hasn't been able to didn't break above 541, which is the resistance on the 1 hour chart, right? And you're going to see here too that this is not the best looking candle, right? A move into, what is this? The 20-day moving average, and having a little bit of a difficult time with it. Team is another one that reported after hours. This will be an interesting one to watch for tomorrow. Took out a 1 hour VPOC. So here's your level to watch, right? So here's how I would think about this. And I don't know per se if I'm going to trade this one, but I would say if you love Team, then what I would say is make sure it holds above 315. Right? You know where you're right, you know where you're wrong. If it's got some momentum to it, it's going to get above this 1 hour VPOC at 315. If it's not, if it's another pop and drop, right? You know that the 315 is your level to get out of, right? And you could have done that with Tesla as well yesterday. Today. The level that I talked about earlier in Tesla was, I think, bottom of value. I said 942 was going to be the level to watch for Tesla, right, which is the bottom of value for the month, and it didn't do it. It didn't have it. So it actually was a pretty good short for a couple of traders in the trading room today. They were all over the Tesla short today. I shy away from things like like this. I think Tesla's a good company. So if I like the company, odds are I'm not going to short it. I do let my personal opinion come into play on judging which names I'm going to decide to go long versus short, right? Because you got to have conviction, right? You got to believe in it, right? And if I were to get into Tesla short and the first green bar I saw, I would be out of it, because I don't have conviction in the short. Very important to think about that when you're going into a trade. Do you like the company? Do you think do you think that it's really going to roll over or not? Or, so these are all things. I don't want to get too far off tangent there, but this is all part of your trading plan, should be, in my opinion. All right, so I stopped at that one. Visa is another one that I think that's acting pretty well after hours. Again, like, nice to see a little bit of a green bar, but we got to see names that actually, do something better than this. 217, but you got a decent amount of overhead supply in Visa. And then finally, I wanted to talk about a couple other names too. Just on the side of, let's talk about something that's kind of interesting. Remember this company? This used to be a company that I would play over and over and over again in years past, right? In terms of buying the dip, right? So big difference, right, between And I think this is an important concept. Now, I was making a little bit of fun on Twitter because I think Goldman took them off their conviction list. Let's forget about that for the time frame. That's not really going to help us other than make jokes. But what happened here, and you always hear this buy the dip mentality, right? When you should be buying the dip. When you have a defined trend like you had in years past, up until like what, October, November of this year, buying the dip has worked very well, right? And you could do that trade over and over and over. Again, you still have to have a stop price, right? And you still have to be disciplined. But once these trends have broken, right? And really it was the 50-day moving average. A couple times this breached this and it was saved. It got back above. So here, like if you were riding the trend, the 50-day moving average should have been your stop out. And it should have been your stop out here. And of course you could re-enter on it, getting back above the 50-day moving average. But once you broke this again, and you don't know, we never know, right, how severe the pullback is going to be. That's why we respect levels, right? We respect the 50-day moving average, right? Because this was a fake breakdown once, twice, right? And back above. This was not a fake breakdown. This was a real breakdown, right? And then further, these two, they never broke the 200-day moving average. So this is the first time the stock broke the 200-day moving average since the trend basically started, all the way back in here when the stock was at $28. So see how beautiful that trend was, right? But once it breaks, it breaks. There's no, so missing out on all this is important, right? And all it is something as simple as a 50-day moving average and a 200-day moving average. And it gets you out of all this pain. And now, you have a whole bunch of traders, including myself. I'm wondering where this thing is going to stop going down, but it has showed no evidence so far of stop going down. Right? Where's that 50-day moving average again? Look at how far the 50-day moving average is. So it's going to take a long time for this name. Notice now it can't even get above the 20-day moving average, right? So this is what trading is all about, guys. It really is. Following the trend until it's not a trend anymore, right? And there's no more buying the dip in this name once it breaks the trend. So, it's a very, very important concept. And that's why I spent a couple minutes on it, because there's a difference of buying a dip in an uptrend versus a name that is now broken the trend and is breaking down. Now you're in a whole nother world, right? I wanted to talk about another name too, but I think that one's more important than this one. This one, right? There's never been a buy signal in this other than a couple small places in here, right? I understand if you got fooled on this, right? Price getting above, it's, what is this, 20 I don't think this is just the 50-day moving average here. It's new. So the 20-day moving average, right? And if you use that as your buy signal, here is your sell signal when it crossed back below the 20-day moving average. Since then, it's anybody's guess when this thing is going to stop going down. And it's not a buying opportunity that it gets cheaper and cheaper and cheaper and cheaper. It's not. This is a poor stock. And again, it doesn't matter what symbol it is. This is Robinhood, but this is the case in any of these names that keep going down. They're not buying opportunities. They're weak stocks. They're weak companies, right? And the price is always right. So you wait until you have a level to trade against, which would be something of the at least the 50-day moving average. And that's how you trade, guys. Because I still see too many people thinking that they're going to buy the dip and like it's going to be okay for them. And I've heard the same thing, like, oh, well, I have a 5-year time horizon. So you want to lose money for 3 or 4 years, or like, that's not a good, not a good argument. Unless you're buying like the indices, like SPY, Qs, and you've got, and it's in your IRA or 401k, and you've got 20 or 30 years, right? Most likely the price action will come around, but a lot of companies, they won't, that won't happen. I'll give you an example, right? If you traded through, again, this is a long time ago, but if you traded back when the dot-com bubble happened, right? There was a lot of companies that were high flyers and they went out of business. They're not around anymore. And some of them, it took them 20 years to come back, right? So, you really have to respect the price action. Here's Cisco, right? Which was one of the darlings of the dot-com days, right? It actually, let's see, do I have the, I probably don't here. I don't think it's going to go that far. And so let's look at this. All right, here is the peak of Cisco. Now again, it went from, and this is split adjusted, but it went from $50, right? But we're talking about years and years and years. For once this thing broke, and you see a lot of stocks like this right now that did these type of ascends and declines. Now, then it started, after it had this big decline, it based $13. It stayed from 6, let's say, I don't know what the range is here, $10 to $17. It stayed in this range for about 12 to 15 years. So forget about your 5-year time horizon that everybody keeps talking about. You got 15 years that you're going to sit in a stock that goes sideways after it. And let's say you bought it here on the dip, right? It took you 18 years for the stock to come back to that price. 18 years. And this is Cisco. This is one that survived, right? This was a good one, right? There's a lot of cases of names that went under. So I'm not trying to scare anybody. I'm just trying to give people some examples of how to kind of think about things over the time, because that argument of having, stretching out your time frame to make it okay, saying, I've got a 5-year time horizon. Well, if this company, anyway, I think you get my point. So I'll move on from here. Let me talk about a couple other things that are going on. Things that I'm watching. I would say credit spreads. They are starting to tick up a little bit. Notice they're still nowhere where they were in terms of what we saw back in here. But I think the Fed will be watching this, right? So again, nothing really yet to worry about in terms of this, but in terms of systematic risk right now in the market, but it's starting to kind of not look great for that. What else? There's one other thing that I wanted to mention too, which I find interesting, is when we look at Fed fund rates. So I put this on. So remember, when the Fed talks about raising interest rates, it is the short-term interest rates, right? I look at all the time, for example, like what the long end of the curve is doing, right? This is the 30-year bond rate, or 30-year bond prices, right? Which had a nice move today, but still not above the 20 period moving average, or TLT, right? Right. That's what a lot of people look at is TLT. This is not what the Fed is adjusting. The Fed is adjusting the Fed fund futures rate, right? So that's this. All right. Now, if we look at this over time, what's crazy to me, right? And this, you could see that right now, this is at like 8 basis points. It's close to 0. It's nothing, right? But they're going to be talking about raising interest rates 25 basis points, right? So it'll get above, 25 there, right? But look at the previous times when we had, the big, the dot-com bubble, as I just was talking about with Cisco. Look at what the Fed fund rates got there. They raised those rates many, many times. They were over 6%. And even when the crisis happened with the financial crisis, right? The rate was close to 5%. We haven't even moved anywhere yet. And even, people were comparing for a while, like what happened when Janet Yellen was raising interest rates, right? The rate did get to over 2%. We haven't even gotten anywhere yet. So I don't know, like, it tells you that the market's been freaking out now for a while. Maybe this just has to do with too many names that didn't make any money, went too far too fast, right? And now everything else is coming into in line in terms of where it should. Now, has the market already priced in, a few of these interest rate hikes, even though the rate hasn't moved yet? Yeah, I think so. But it's the question of the uncertainty is, how many of these rate hikes are we going to get? But just interesting, I thought that the market hasn't even, we're not even off the line yet, and we've got issues. So bottom line is, I think, continue to watch price, respect, and that's probably the main point that I'm trying to carry through in this video is respect the price action. Don't think about opinions and about, what you think is right or wrong. Price is going to tell you, right? And, and that's why I'm trying to be as patient as possible, right? And watch for some confirmation that the damage is, that we're starting to recoup. 200-day moving average, right? 5-day moving average. Talked about that yesterday. Continue to watch that and some other factors like the small caps, like what Tesla's doing, right? And some other stocks as well. All right, guys, that's enough. That was a pretty long video. Thanks for sitting through it. Have a great night, everybody.